So you decided to buy a house at the Jersey Shore or maybe even Ocean City, but you have no idea whether you need flood insurance or not. No worries. I have you covered. If you are applying for a mortgage, yes, you are required to have flood insurance. If you own your home outright and you pay cash for it, no. At that point, it becomes really a personal choice. But an important consideration arises in the case of a condominium ownership, where the property is shared between multiple owners. Here, the general rule regarding flood insurance can have specific implications. For instance, imagine two-unit condo where unit 1 is fully owned without a mortgage and unit 2 is under a mortgage. In the event of flood, unit 1, situated on the lower level, is likely to sustain more severe damage due to the proximity to the ground, and unit 2, while possibly incurring less damage, unit 2 with a mortgage would depend on the timing, repair, and reconstruction of unit 1 to ensure his own habitability and access. So this example shows that even if you don't think you need flood insurance because you don't have a loan on your home, you might still want it. This is because what happens to your neighbor's home can affect yours, especially in a flood. When you're ready to purchase your summer home, there are a few things you want to know. What is the flood insurance annual rate? If the rate is good, make sure you ask the seller to transfer their rate over to you, and all that is needed there is a transfer form filled out by the seller. If the house you are purchasing does not have flood insurance, then you will need to ask for a certificate of elevation. You will need this to obtain a quote from the insurance company. So let's say the homeowner had owned the home outright, doesn't have insurance, doesn't even have a certificate of elevation. Then, as the buyer, you will need to hire a surveyor to come out to the house and survey the property. This will set you back about $500. Without the certificate, though, the insurance company will estimate, and that could cost you more than you should be paying. Let me just tell you, they'll just quote you the highest quote they can. Now, the next thing you want to do when you go under contract is to have your insurance company pull that clue report. And what's a clue report? It's a comprehensive loss underwriting exchange report and can reveal claims that was made on the house after a hurricane. It just provides history of the insurance claims on the property for the past 7 years. So if you're checking a property in a time frame where such claims fall within that last 7 years, the clue report could list this claim along with details about the nature of the loss, the amount paid out, and the date of the claim. So here's another good tip too I wanted to share with you. Have your agent go back and look in the MLS for old sellers disclosures. You'd be so surprised what you can find in the MLS history of the house. You can go back pretty far. Every time that house is in the MLS, there is information in there that you can connect the dots and maybe figure out some clues. I use it all the time and it works for me. You just can't imagine what I find. So let's say you have me show you only homes that are raised or possibly new construction. And what if I told you you could significantly benefit from lower flood insurance rates, which would impact your wallet in a good way and give you peace of mind? So take my Bayfront home, for example. It was built in 1985. It withstood Hurricane Sandy in 2012, and we were grandfathered in, meaning we weren't required to raise our home to meet the new elevation standards. Now, while that might sound like a lucky break, it's had a significant impact on our flood insurance rates, and we are currently paying $4,072 annually, and that continues to climb each year. So that's a disadvantage. And now imagine if we had raised our home or it had been built according to FEMA's recommendation elevations. Our annual flood insurance costs could have been around $500 with no yearly increase. Yes, I know, it's unfortunate. So here's a lesser known fact that you might not know, and that is if you own a summer home and it's your primary home, guess what? You can save $250 off your policy if it's your primary home. Now, why would the insurance company do that? The main reason is simple. Being present full-time allows the homeowner to actively prepare and protect their property from potential storm damage, reducing the likelihood of severe losses that the insurance would otherwise have to cover. Here's the deal. I want your summer dream home to stay just that, a dream come true, not a financial headache. With the right information and moves, we will get through this flood insurance stuff together, making sure that everything goes smoothly and stress-free. Working with me means you've got a guide who's all about keeping things positive and straightforward and making sure we find that perfect spot for your family to enjoy endless summers in Ocean City or anywhere on the shoreline. Let's make it happen with no worries and a lot of good memories ahead. This is Lisa Giustudo, your realtor in Ocean City, New Jersey.